Okay, and that was my problem. I was losing big. One of the main things that you need to do to become a profitable trader and a professional trader is that you need to control loss. You need to stop losing big. Whatever's happening that's making it so that you're losing big, you need to identify and quell. Okay? Without that, you cannot become a profitable trader. You cannot become a professional trader. You have to eliminate the big losses. You have to figure out what that is. If you're trying to short a B wave, you are going to lose big because you just have to be wrong once. And that distance, right? Look at this distance between where the A wave ends, right? And the B wave can end is huge. It's huge. So you don't want to get in anywhere in the B wave. Don't worry about the B waves. All you want to do with the B wave is identify. Again, this is step one. This is step two. Identify the A wave, identify the B wave. The B wave is usually going to be messy and it's going to take a little bit of time, okay? Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 19th, 2022, and this is a special instructional video on how to safely enter a short using Elliott Wave theory. Okay, so this is how to safely enter a short using Elliott Wave theory. If you are not familiar with Elliott Wave theory, there is a book that I highly recommend so that you can learn the rudiments, the basics of Elliott Wave theory, and it's in the description. It's an Amazon link to a Kindle book. You can also, there may be a paperback, but anyway, you click on that, you use that link, it supports the channel in a small way. All right, first and foremost, shorting is one of the most challenging things in trading, in my view. Some traders are only short, some traders are only long, some traders play both ways. Now, I think in my experience, I've noticed most traders do not instinctively short, okay? They have trouble shorting for many different reasons, okay? Sometimes they feel bad about shorting an asset that they believe in fundamentally, right? Or they just can't wrap their minds around flipping things on their head because they learned how to long first. And so trading backwards is kind of tough. In any case, I've developed this over trial and error, many ill-conceived trades that really hurt my P&L, trades that so this is important. One of the things I noticed is I was getting pretty good at trading. I was winning a lot of my trades, and I won maybe 75, 80% of my trades, and then the small percentage that I lost big, and I didn't know why. So I examined my trades, and I found out that I was getting trapped into bad shorts, okay? I was shorting too early. I didn't know how to enter. And so this really helped me turn a corner into becoming much more profitable once I figured this out, okay? It takes a lot of patience, right? First and foremost, you identify an uptrend, all right? You can't short without having to identify an uptrend. And the identification of an uptrend is simple. According to Elliott Wave theory, the uptrend is over after you identify 5 waves, okay? Because, impulses go in 5 waves. So here I see 1, 2, 3, 4, 5, okay? Let's just put our wave count because it's 1, 2, I'm going to change the color in a second, 3, 4, 5, okay? So you don't have to be perfect at this, and I'm going to show you why, okay? This method allows you to do so safely. because one of the tricky things about Elliott Wave theory is counting waves. Sometimes, it's not perfect. You may miss a wave. You may identify a wave 4 as being an A wave, right? Basically, all you want to do is guesstimate. You see 5 waves more or less. That's good enough, okay? Then you want to identify a break of structure, and that is called an A wave. An A wave is an initial break of structure. It's 3-wave structure, okay, because it's a corrective structure that takes you typically from the top of your move all the way down to around the 4th wave 4 of the previous trend. Okay, so this one you see, we have our 5-wave structure, and then we have, I'm going to change the color here to something lighter. We have this A wave, which is an initial break of structure, and it lands in that region of your wave 4. Okay, so that is one way to identify, okay, we're breaking trend, we're going down, okay? This uptrend is now reversing, okay? But that's just the beginning, okay? In the beginning or earlier days, I would get really kind of really excited about correctly identifying this initial break of structure, and I would enter my short way prematurely, okay? And I know a lot of traders do this, but that's just the beginning. This is literally step 1. You identify the break of structure, and the break of structure usually comes, once again, to the wave 4 region of the uptrend, okay? So once you have that, then you have to wait for the B wave. The B wave, which you see here, is essentially the counter to the A wave. So initial break of structure, that's the initial break. The B wave, think of that as the retest, okay? So the retest is going to usually come to the 786. And I say usually come to the 786 retracement, Fibonacci retracement, because if you pull your fibs of the A wave, you see that typically the A wave is a flat correction, okay? Sometimes it's a zigzag, which is a 535, but usually it's a 335, okay? And flat corrections have a minimum retracement of the 786. And because we usually see flat corrections, that's why your usual retracement of the B wave is the 786 retracement, okay? That's just like, you're still observing, okay? You don't need to have any of this down, right? Again, this is a safe way to short, and I'm going to show you why it's safe. Because all of these things, no matter how advanced you are, you can get wrong. You can misidentify. That's why this is just step 1, identifying the A wave. The B wave is step 2, okay? You're still not entering your short, okay? Once your B wave is complete, and having to figure out where the B wave ends is tough. So you're not going to try to time the top of the B wave, okay? After I got a little wise to reversal patterns, I was like, oh, I know. I'm just going to identify the top of the B wave. That is extremely risky. I've lost so many trades trying to do that, where I ran out of real estate because the B wave kept going up. And here's why that's risky, and that's a bad idea. A B wave can retrace from the 0.5 Fibonacci of the A wave all the way up to the 1618, okay? Even if your liquidation point is above the 1618, if you set your stops at the 1618 and you're wrong, and this is just a wave 4 correction or a ending diagonal, right, of a wave 5 or a wave 3, whatever, you lose big. Okay, and that was my problem. I was losing big. One of the main things that you need to do to become a profitable trader and a professional trader is that you need to control loss. You need to stop losing big. Whatever's happening that's making it so that you're losing big, you need to identify and quell, okay? Without that, you cannot become a profitable trader. You cannot become a professional trader. You have to eliminate the big losses. You have to figure out what that is. If you're trying to short a B wave, you are going to lose big because you just have to be wrong once. And that distance, right? Look at this distance between where the A wave ends, right, and the B wave can end, is huge. It's huge. So you don't want to get in anywhere in the B wave. Don't worry about the B waves. All you want to do with the B wave is identify. Again, this is step 1. This is step 2. Identify the A wave, identify the B wave. The B wave's usually going to be messy, and it's going to take a little bit of time, okay? B waves typically take as long as the A wave or a little longer. So in this example, our A wave, our initial break of structure, took 7 hours and 45 minutes, okay? Our B wave took 16 hours and 30 minutes, okay? That's typical. I've seen that. It usually takes just as long or around twice as long, but longer than the A wave, okay? So that's time. This takes time. Again, the moment you identified the initial break of structure up here and you know, oh, we're going short, literally a day plus later, right, from that point, a day later, the B wave ends. This is why shorting is challenging, because the time it takes from when you first identify the opportunity to when you can safely execute is long, and you're not going to sit in front of your computer for a day waiting for this to develop, right? This is why you need a good strategy. So again, number 1, you identify the initial break of trend. Number 2, you observe the B wave. In no way, shape, and form do you enter yet. Number 3, you need a pivot, okay? So every reversal pattern has an A wave, and now let's sort of label our B wave. Our B wave goes A, B, C. This messy thing here, and we're going to change the color just to keep everything clean. Let's change it to blue. This messy bit is an impulse. It's a messy impulse, but it's an impulse, right? It's a 5, 3, 5, 3, 5. It's a leading diagonal impulse. Or is it? What is it? Maybe it's an ending diagonal. I think it's an ending diagonal. Yeah, it's an ending diagonal. This is 3, 3, 3, 3, 3. Okay? So that's what it is, right? But anyway, you're not going to try to suss that out and try to enter there, right? I've done that before. I've made that mistake. It's a terrible mistake. It's a low probability trade, and you would have to put your stops all the way here based on the A wave. And if you're wrong, you lose big. And if you lose big, you're out the game after just a few trades, because you won't be able to sustain those kinds of losses for much longer, okay? You're going to have to re-up your account. You're going to blow up your account very quickly. I've done it, okay? When do you enter? So after the B wave, you want to identify a pivot. Price always needs a pivot. You can't just change direction. So after this A wave and this B wave, now the price is ready to go down, but first it needs to pivot. Let's jump on the smaller time frames, and we're going to identify the pivot. Do you see this right here? This is a pivot. It is another A wave, a smaller version, and then a smaller version of a B wave, which took about the same time, if not a little longer. So this A wave took, this was an initial break of structure. This A wave took 15 minutes, okay? This second B wave took, it starts right here, ends right here, 35 minutes. Again, you see the B wave takes about a little bit more than twice as long as the A wave, okay? You see that a lot. It's not always the case, but that's typical, okay? Just to give you an idea for how long the B wave can take. So this pivot is your last final move before price goes down. And the C wave, the impulse of that pivot, is where you're going to begin to even think of entering, okay? And you're not going to enter yet. What you're going to do is, let's go on a really small time frame. This hasn't played out yet, but I'm going to illustrate it for you nonetheless. You're going to wait until this impulse plays out. Okay, this is wave 4 most likely. Let this impulse play out. All right, wave 1, wave 2. Okay, let's just not be lazy and label this properly. Okay. If you're getting value from this, please like the video, share with other people who may be struggling to short or interested in trading, interested in Elliott Wave theory. Subscribe to the channel if you're not yet subscribed. We'd love to have you. Daily videos, and once in a while we have instructional videos like this one. All right. Wait until you get an impulse, okay? You've identified the A wave, you identify the B wave, you identified a pivot. After that, the impulse you get, which is going to be a 5-wave structure down to the downside, that is when you want to pay attention. You don't get in there. You're going to get in on the retest of that move, okay? So let's say the impulse comes down here. You're going to let your wave 2 play out, okay? And a wave 2 is going to be basically a simple retest of this impulse, okay? Something like this, okay? Something like this. And you know that wave 2 cannot exceed the 618 retracement of an impulse, okay? So basically what you're going to do to safely enter this short is wait until this plays out and hide your shorts behind the 618, okay? I like to hide it behind the halfway point of the 618 and the 786, right? So, for instance, on this chart, I would hide my shorts at my stop at 42,250, okay? And enter, wait until price comes up around here, okay? Enter your short. I usually market sell, okay? I market sell because it's hard to catch the move with the limit order. So I usually market it to execute it. Set your stops here. Let's say you're wrong. That's okay. You don't take a big loss because let's say you misidentified it. Your stop is right behind there, okay? And you're using sound theory to set a high probability trade. That's a high probability trade. If you're wrong, you lose a little bit. If you're right, you win a lot, okay? This is why you want to wait for the first impulse before shorting. And that's how you short safely. If you got value, once more, like the video, share the video with other people who are interested in Elliott Wave theory, who are interested in trading, who are interested in technical analysis, and subscribe to the channel if you're not yet subscribed. And I hope this is helpful. I hope this is useful. I hope this helps you become more profitable. I hope this helps you short more safely and more profitably, okay? And that it helps you not make the same stupid mistakes that I made. But once again, it's very difficult to learn without making these errors. It's hard to just get theory. You have to kind of just trade your way into understanding this stuff, right? You won't forget it once you take a few losses, and you're like, crap, like, and you're like trapped in a short where it just keeps going up on you, and you're like, why is it going up? This never-ending B wave, okay? So that's it for me. Hope that was good. I'll see you guys tomorrow.